All right, welcome everybody. We'll get started. It looks like about 3 minutes or so. I just want to do a quick audio check for those that are in the room already. Let me know if you can hear me okay. So let's make sure the audio is good. And then once that's good, I'll put a little music on and we'll go ahead and get started. Voice is A-okay. Excellent. All right, let me put a little music on and then we'll get started in a few minutes. All right, good morning, everybody. Welcome to Stock Analysis Friday for today, which is August 4th, 2023. My name is Bennett McDowell, and I am the technical analyst for both TradersCoach.com and AppliedRealityTrading.com. All right, great to have everybody here. Welcome all. And Al is ready to go. QS wants to know if we want to short on that. Al, I'll get to that in just a bit. We'll check that out. A few administrational items to cover first. Before I get going, however, the Dow is up 191 points right now. So the markets are pretty good today. NASDAQ is up 85. S&P 500 is up today, the NASDAQ and across the board, and cryptos are up as well. So all is looking pretty good on the Western front, so to speak. All right, let me just go through my administrational items, and then we'll jump into looking at the stocks. Now, if you have a stock for me to look at, definitely type it in caps, okay? That makes it easier for me to see. And it can be a stock or an ETF, okay? Exchange traded funds are fine as well. All right, a couple quick things on the risks involved in trading. In trading and investing in the financial markets, we deal in a realm of probabilities. There's no guarantees. Past performance does not guarantee future performance. Hypothetical trades do not guarantee what will happen in the actual real markets. So keep that in mind. Like I always say, without the risk, there is no opportunity. So yes, there's risk in trading or investing in the markets, but there's risk in everything we do in life. Okay, so you just want to be able to protect your downside. You want to be able to trade with money you can afford to risk, called risk capital. Okay, that's really important as well. And then we're going to be looking at a lot of stocks today and ETFs that you may consider actually trading. So check with your financial advisor, accountant, or attorney, or whoever manages your money to be sure what we suggest here is suitable for you. We don't know your personal situation, and of course they do. So that's important to check with them first. All right, I have several books available on the market today. If you're watching the recording, or double back and watch the recording on this, I will put the links up to our book ordering page at Amazon. We have a custom page there where you can order these books from there, or you can go to our websites and just click on books. All right, so first book I want to bring your attention to are the money management books. I've got two. I've got the book second from the right called Money Management for Traders. This is a really, really good book. I just came out with this last year, and basically I've stripped down money management to the nuts and bolts of what you need to know in order to control your risk as best as possible on each and every trade. So that's a great book, easy read. And then I have my more extensive book, A Trader's Money Management System, on the far left as well. So you can pick up those books. Now, I'm really excited about my new book, The Art of Trading. That's the book on the far right, second edition. So I'm putting the final touches on this. It'll be ready probably by the end of this year, maybe early next year now. I've kind of extended it because I've added a few more chapters on it. It's a great book. I put a lot of new material in here. This is a second edition of my first book called The Art of Trading that came out in 2008. And since then, we've included a lot of new software and a lot of new techniques. So you definitely want to pre-order that as well, and you can get that on our page. And then I have Elliott Wave Techniques Simplified, published again by McGraw-Hill, and Survival Guide for Traders. So those are books all available for you that you can purchase on our Amazon page. All right, in terms of software, for those new here today or watching the recording, we have a variety of different proprietary software that I've developed over the last 30 years of trading the financial markets. So in the top row, we have our charting software. The middle row, we have our scanners. And the bottom row, we have our risk control. So the software gives you tools to address the major issues you need to address in order to be successful in this business. And then we provide ongoing education each and every week that's free when you purchase our software. So the idea here is these are the tools, and then the next step is knowing how to use the tools. And that's where we really shine. So definitely check that out, and I'll put a link up here on the recording as well. And then finally, please take a moment right now and give us a like. That helps us on YouTube. And share us to friends. The more people we have coming here, the better, because we bring more stocks for everybody to share. And what's interesting about this service that we really didn't think about when we first planned it is that when we first started out, we basically were going to help people decide, how their trades are doing or whether they should go into a trade using our form of technical analysis. However, what happened really was everybody brought enough stocks to the plate, so to speak, to the table, that we were able to find ones that we weren't aware of. And so it became really a stock picking service. So it's kind of cool. All right. So we have a good time here, and we'll be here probably about an hour. I try to usually cut it at the hour mark. So I do try, and that usually gives us enough time to get through everybody. All right. So give us a like. That definitely helps us with the YouTube people. All right. Let me tell you what you're looking at here. Okay. First, before I get going, is This is NinjaTrader, okay, which is not our platform, but it's a platform our software works in. And I have it made up into 3 different charts. So on the far left-hand chart, this is a 60-minute chart. Now, what does that mean? That means that each price bar represents 1 hour or 60 minutes. The reason I have this up here is it gives us a look at the short-term aspect of whatever stock or market I'm looking at. The chart in the center, which is our biggest chart, is the daily chart. This is the chart most people use most often when they position trade the market. So every price bar there represents a full day. So when you go to an internet site or you go to a newspaper, this is kind of the usual normal chart you see. And this is basically gives you a good look at the intermediate time frame. And usually we base our trades for position trading for like the next few months to 6 months off that trade. And then on the chart on the right is the weekly chart, and this is our long-term chart. So this is a great chart to use to get the overall look at what's going on in the markets from a long-term perspective. And we even use this chart to make investments as well. So if we're going to make an investment in something long-term, and let's say we get a call from our broker and the fundamentals he says look really good, we're going to look at that weekly chart to see if we agree with them. And then, of course, on each time frame, we have our software loaded into the chart. So, for example, you'll see these little triangles on the chart. There's green ones, there's bearish ones, red colors. You got this 2B, you got greed bars, okay, etc. So, and you got fear bars, you got bullish and bearish signals. And this is the ART system working on price patterns. So that's ART, okay? So whenever you hear me talk about ART, that's what that is. The indicator here is called the OWL. This stands for the optimum wave locator. We use that because it measures momentum. So when we take a long trade, we like that to be green. When we take a short trade, we like it to be red. And also it helps us with the Elliott wave count. Down here is what we call the PTF, or the precision trend filter. And this basically has 3 colors. It's either green, yellow, or red. So that means it's either bullish, neutral, or bearish. And you'll see how we use that as we look at stocks. Trendline master is our next small ribbon here. And this basically is associated with the trend lines that get drawn on the charts. And then here at the bottom here is the ERI, which is our greed and fear index, and it's called the emotional reader index. So that's our software on the charts. Now, if you look at the top here and you see this multicolor strip or window, that's our scanners, okay? So we have a variety of different scanners that scan the market. That's how we find stocks to actually trade or invest in. We're not going to use that today because you guys are bringing the stocks to us. All right, so I just want to cover that before I jump in with our first pick today, which is QS from Al. He wants to know if you want to go short. I just want to talk a little bit about the ETF USO, which is in front of you today. Now, USO is the ETF for oil, okay? And the oil stocks, we think you want to be bullish on today. We think the target on this short term is 99 to about 125, and we're sitting at 73.42. And this is a fib target zone we're thinking that this will go to. So we're probably looking at some form of an Elliott wave 3, 4, 5. There are 5 waves in an Elliott wave trend, and the trend ends on wave 5. And on that time frame, it looks like we're going to get up there pretty well. Now, what's interesting on this trade, if you've been following us, you know, it reached the retracement zone, the target for a pullback in this area here. So we went long once, got stopped out, went long again, all right, and now this one's actually proving out to be the one that's going to be a winner here. So I think it looks real good. You want to put your stop pretty far. I think you could use probably this pyramid at this time. All right, just under that pyramid trading point, which is what we use for stops as well as entries. So looking good. It looks good on the weekly chart. All right, everything is good, and of course good on the daily chart. So when I look at this, this is yellow, neutral, neutral, neutral. That's okay to go long when they're neutral. Bearish, bullish up here on the owl, bullish, and turning bullish here. So all looks good. All right. So that's one I wanted to put on the buy list and give you today as one I would go long on with a target of 99 to 125. Okay. And put your stop under that pyramid. And let me just bring up the data box for just one moment. Let's bring that over here and let's tell you exactly where you can put that stop. You can put that stop at this particular point at 67.35. So one tick under 67.35 is the place for your stop. So this is how we use the tools here to not only make a decision of when to enter, but we also use other forms of technical analysis like Elliott wave and fibs to give us targets and to try to keep us going in the direction of the impulsive trend, current trend. All right, so there you go. All right, QS. Now this one is for you. Okay, let me back up. I got a lot coming in. This is great. All right, so QS. Al's asking, hey, what about a short here? No, okay, not yet. It's too late to go short on the 60-minute chart. So short term, yes, short. All right, but the entry would have been better up here, not here. Okay, so don't go short. Too late. Now, this is green and this is still green. So what have I always told you? What's one of the things I usually preach here? When you're trading off a bottom, all right, you got to keep that stop pretty low. Okay, so the stop needs to go under here. Now this bottom held, so it went way up, but then it came way down and went way back up. So as soon as it clears here, you move your stop up under here. So that probably, since this is green, this indicator has a 75% accuracy rate. And basically it's saying after this pullback, it should go up. So it's not calling for another bottom below here, but it is calling for another high once this move down is over. Don't short it. I wouldn't go long here either, because you have to wait for the 60-minute chart to give you some green here and at least yellow or green here. So you got to hold off on that, okay? If you use one of the pyramids and just traded this leg up, well, you made a nice little profit already, okay? Now you're just waiting possibly to go back in. So that's how I would play that, Al, and thank you for sharing that. All right. Oh, Thaddeus, you're here. Good morning. Okay. She's new for this week. So great to have you here. All right, Jim, good morning. And Eleanor, good morning. Okay, Jim, USO, I covered that one. I think you were here for that. So hopefully I helped out on that one. Let me know if you need more information on that. All right, DWAC is our next one. And this one is for Al. Okay. All right. So Al, probably, let's see. Okay. Yeah, we looked at this already. Okay, I'm coming back. My computer, for some reason, decided it wanted to restart. Let me know if you can hear me okay. I'll be back on the charts in a minute. I got to get things set up here. Let me know if you can hear me okay. Okay, good, Al. Thank you. All right, give me a minute, because I have to load everything. You know how that goes. Well, I haven't had that happen in quite some time, so sorry about that. All right, I'm going to scroll up and try to find where I left off here. I think I was USO. I think plug is the DWAC. I think I looked at that one, right, Al? So I think plug is the next one. All right, give me 1 second. We're almost there. All right, give me 1 second. We'll hit the share screen button and try to get back into the swing of things. Okay, how's that? All right, let that load up there. I think we're back in business. Nope, still got to wait for the data to load. Okay, let's hit it. All right. Thank you for hanging with us here. All right. So, okay, so here is plug, and plug is still looking good, Al. All right. You should be an oldie but a goodie. Yes, that's true, but you still want to stay with this trade. All right. Now, let's see what it looks like for other people that may want to join it. That's really the question here. So I still think you got some room up. I'm only seeing a target on this short term of 16.27 to 21 bucks. So we're sitting at $11. So you get about a $5 profit possible, but the 5 point possible. Problem is you need to be precise on where to put your stops. And right now we've got a little bit of red here. Your stop currently would have to go here or here. And so I probably would not go in it at this point, but if you're in it, stay in it. Okay, that's how I kind of would do that. All right, so definitely if you're in that, and I think you are, Al, stay in that. All right, NIO for Jim. Let's take a look at this bad boy here. Ooh, looking good, looking good. I'm liking this one. All right, I think this one may be new for this week or session. All right, couple things on this. All right, reminds me of the cryptos, up and down, right? Up and down. So, you know, you had 100% retracement. If you look at the weekly chart, so it went up, popped at 2021, and now here we are coming off a bottom. I like that. Okay, not much room for it to go down. So I think this one looks good for two possibilities. One is if we're conservative and take a look at where a short-term target is on this, we can certainly see, I think we have some profit potential here. Okay. It would have been nice to get in a lot earlier though. Okay. You know, if you don't get in early enough, the problem is that it's more risky to get in here than here, right? So you got to be careful about chasing trends. You still have quite a bit of profit to go. So, I mean, 25 bucks to 37 is our short term. Now, it is also possible in an Elliott wave sequence that this, instead of being a 3, really is a 1 because it retraced much further than a wave 4. This could be a 2. And if that's the case, this is a 3, we're going above 70. Okay, so that is the possible long-term situation, but you can't trail your stop up if you're going to take that scenario, and you've got to be planning on being in this thing for years. On a short-term stance here, I think you could use the pyramid base here. Okay, you've got to get into that 50% 31 mark for a 2-to-1 gain versus risk. So I think you're okay on this one. So let's put NIO down as a buy. And I'm going to give you the stop point here in just a minute. And I'm thinking here, grabbing our data box here. Let's see, take a look and put our stop under here at, I would say what that is, about 10.45, one tick under that pyramid. Okay. That's kind of what I'm thinking on that. All right. So that is a go. If you're not in it yet, I think you're okay. But, you know, also too, just realize that if you go in it here, don't be upset if you get a little pullback before it goes here, because you do have bearish divergence here, but you don't have it here. So when I don't have it on the 1 minute, I go ahead and go in. Okay. All right. So that is NIO. All right. Let's see what we got. ZS. I think that's a new one now, right, for us. ZS. That's soybean futures. I don't think we're going to get data for that one. All right, let's see. Maybe we will. Okay, we do. All right. Okay, that's a new one now for you. All right, so let's see what we got here. Again, green, 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 no red, but we have red here. All right, so we're still pulling back a little bit. We've gone below a pyramid here. So first bounce off, you got to keep that stop under here if your intentions are to stay in during a pullback and coming back up. If you use the pyramids, you'd be out here to profit. Got in here, out here, that's a profit. So I probably at this point here would wait for this to finish coming down. You see, we got a little pullback and we got to wait for that to stabilize. So I'm not going to recommend this one now, but let's put this one on a watch list. How's that? We'll put it on a watch list because that may be a good one later on. All right, let's take a look at AIRS. This is another one for you, Al. All right, so let me just put that one there. Okay, so not much history on this. We only go back about a year, right? Okay, so we're going to rely on the shorter time frames for any type of Elliott wave count. Not so good on the daily, and we have something a little bit more possible here, but we did have bearish divergence here. Okay, so you've got green across the board on the OWL. You have no red on the PTF, so I like that. My problem with this is, where is it going? Okay, where's the target? There's not enough history for me to really get any type of decent target. And if I draw the fib retracements in for something that possibly could be a short term, we're already there. So no go on this, okay? No go. But thank you. All right, so AMD for Eleanor. AMD for Eleanor. Let's see what we got on that one. And we're going to look at Amazon too, Eleanor. All right, so AMD has been one we've liked. Okay, we think it's been, but it's been going up for quite some time since we liked it. So here's the situation. Is it good to get in here, or is it better to get in down here, right here, right? So even though long term, we expect this to break 160, just based on the fact that the PTF is green here, so there's a 75% probability will eventually go be above there. The problem is how is the journey to get there going to look like? Is it going to come up here, pull back here, and then go up there? Okay, if that's the case, this will be right. But look at what this pullback is going to do on any closely held stops. You're going to get stopped out. So you'll never make it here unless your stop is put at a good place. I'm going to say no on this one for right now, because I think even though we may get, this is green, so you may get one more high above 130. That is possible. The problem is that you got to have your stop pretty low down here. So if you're in it, great, stay in it. If you're not in it, I think I would hold off and let's wait for the next big pullback on it. All right, Amazon. Let's see what Amazon. Amazon, of course, is one of our darlings, so to speak. Certainly, it's one along with the alphabets that have certainly helped the tech stocks get to where they are. All right, and it just keeps going up. All right, so this is why we liked it for a long position, and we still like it. So it's blown through. What we did is we put a resistance level here, and we wanted to see here if it would blow through there, and of course it has. And so we really think at this particular point now, this is poised to go much higher. Now, it will have a pullback, and that's why we're drawing these retracement levels in. So you want to have your stop always below the current retracement level. And so you probably are going to want to put it, I would say, on this lower pyramid here or even under here. So in fact, let's raise that up. We didn't raise that up on this one yet. That's inaccurate. Hold on 1 second. Yeah, so you want to put it on this pyramid here, okay? Put your stop right there, okay? Can you go in it now? You could, but don't be surprised if eventually you get a pullback to here before it goes higher. But the forecast is above here, okay? So this is a 4-3, and I'm expecting way into the 200s, or about 220 probably on this, 210 to 220 before it tops. So that's almost to double your money. So if you're a long time holder, you can buy it, put your stop below 109. If you are short term, okay, I would wait for the pullback and then go long. Okay, so I'm not going to put it on a buy list because most people are more short-term position trading here, but certainly it's one we like, and if you're in it, enjoy. I hope you've enjoyed the ride. All right, Stewart, ADM. Let's take a look at that. Okay, so green, I'm seeing green across the board. Notice that the owl on the 60-minute chart just turned green. Okay, so that's good. You got green. Let's check the boxes. Green, 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 green. Red, but green. Okay, so does the red concern me on the weekly chart? It might, but let me draw the retracements in and see if it hit the retracement level. Okay, so it hit the retracement level. When that happens and we've taken out the bearish run there on the pyramid's support level, and this is green, and this is probably go green. This is a go, okay, in terms of breaking out to a new high. Let's open up the weekly chart for a moment and see where this thing could go. So I'm going to get rid of this, and then we're going to draw in this. And where's my extensions? There they are there. Okay, so we come up here. So our target on this is 112 to 139. That's where our target is. And we're sitting at 86. So you got some room. All right. If you go in here and you put your stop here, you've got a 1 and then a 2 up here. So you need to get to 125 in the target range to make this a super big winner. But if it hits the target range, you'll be happy anyway. This is green. So I'm liking that for a long-term trade. On the short-term horizon, here again, here's what we battle with. Is it better to have gotten in here on this pyramid? Beautiful entry here. Or is it better now to get in here? Okay, it's more risky here. So you got to make sure your stop, if you go in now, is set on the right pyramid. And in order to help us determine that, we grab the fibs retracements. This pyramid, while nicely in the target zone, may not be enough to keep you in the trade if it's a deep retracement. So you may have to go under the target at 76.58 just to be sure. So I'm going to leave that up to you and what you think on that, but certainly that would give you a 2-to-1. So I'm going to put this down as a buy, but you got to have that stop at 76.58. Okay. Don't forget, you can always use options. Anytime the market runs away from us, you can always use a call option and create a synthetic loss stop with the option, or actually a synthetic loss dollar amount too, depending on how much of the option you buy. All right, so that's always something you can do with runaway markets. Okay, so USD. Ooh, let's check that bad boy out. We haven't looked at that in a while. Keep writing USD. There it is. All right, let's get that bad boy, dollar. Let's see how that US dollar is doing. All right, and this, Terry, is for you. Let me get your name up there. Okay, so was a USD a buy? It would have been. It's not probably now. Okay, I would not do anything with this now. The buy would have been better down here with a stop here, and then roll your stop up here like that. Okay. Certainly on the weekly chart, entry here, long-term trade, your stop would be here right now. Okay. So it's too late to get in it, but it would have been a good one. All right. Let's see. Is that a stock K or is that okay? Let's see what we got. Let's see if we got a K up there. All right. K for maybe Kmart or something. All right. Messy stock. All right. However, we do have some green on there. So let's take a look. All right. Bearish trend here, bearish, bearish, bullish, bearish, bullish. Okay, so here's the thing. All right, it's in a correction right now. Eventually, when this ends, a long position is going to make sense, but not now. All right, there's just too much red going on. Also, look at that chart. Now, do you like that chart better or do you like this chart better? Okay, much clearer chart, because there's the impulsive wave. So try to stay out of those charts that are really messy and volatile, because the reason for that is that it's going to create a situation where if you have a lot of volatility, you got to be very careful with your stop. And you can see we're kind of stuck in this broad channel here, and now it's a smaller channel. And if you're into pennants, maybe we could get something like this drawn a little bit. So I'm thinking no go on this one. Okay. There's better ones to choose from, but thank you. All right. And that's why you come here. All right. So all good. So let me just see. I think I lost my place. Okay. All right. So Thaddeus, thank you for sharing that one. Good. All right. Let's keep going here. A lot of blue screen. I know, right? Mine actually turned green, whatever that means. All right. So I think we're back in. Okay. So yes, USO. Did I get it? The USO actually was the one that I talked about first that I like. So USO is a buy, okay? Because we're thinking it's getting up to 99 to 125, but you got to put your stop at 67.35. We want it just under that pyramid, okay? And yes, ADM is good. All right, let's keep going here. All right. Let's see. Okay. Thank you, Stuart. Let me just make sure I got this right. NIO. Yep. Got that one. All right. So DWAV. DWAV. All right. This is where we got cut off last time. Now, Al, if it cuts me off again here, then, it has to be something with DWAV. Joking, of course. All right, let that load. Interesting, very slow load on this one. Did I type that in right? DWAV. Oh, it's AC. Okay, DWAC. All right. There it is. Okay, DWAC. All right. So yeah, this is the one I liked overall. But here's what you got to do. All right. This is a problem. So don't go in it now. If you're in it, this is why we put our stop at the bottom. So we like this for a trade, provided your stop is below that pyramid, right? You got to keep it below our pyramids. This is what's so valuable about this, because it looks at the fractal nature of the market, and then gives us not only an entry, but the highest probability place to put your stop to keep you in the trade. And so that's down in here, right? So you want to get that stop under there. For those new here, do not take this because it's still pulling back. All right. Red here, we're not done coming down. So maybe next week we can get you in at a better price. So I think you're going to have to, hang in there for the pullback. But at the same time, at this point here, look at that pyramid. Now, if you planned on it filling the gap and you put your stop here, you're still in it too. And that's okay, but that's the problem with getting in sometimes up in here, is it forces you to put your stop at a less advantageous place. So yeah, stay long if you're long on it. I think you'll be okay, but I think you got to wait a little while further for the pullback, but don't go in it if you're new here. Okay. All right. Let's take a look, Stu, at ZS. ZS. We did that already. Soybean futures, right? And yeah, okay, I got it. All right, so let's go to PAYC, and this is short for you, Al. Let's take a look at this one. PAYC. Okay, so what do I think about this one? I think it's kind of messy. Not really excited for a short. The PTF is red on the 60-minute chart, but it's only saying it's going down a teeny bit further. So that really doesn't help us for a target. So yeah, you would have been long and you would have been stopped out. You would have had a profit or at least a break-even trade because it gapped, but you wouldn't want to be in this now, and I wouldn't want to be short, okay? The technicals indicate more possibility to the short side, but here's what I'm concerned about. I think you're going to get a rebound, maybe up into the gap area here on this chart. And then I think you'll have a better opportunity to go short if things look still bearish there. So I'm not saying no to a short maybe next week, but no short now. Okay. PAWC. All right. Ooh, GOOG. All right. Yeah, Google is better. But the problem with Google now, because we recommended this a long time ago, but Google is good, Thaddeus, overall. If you're in it, stay in it. Okay. Again, if you're thinking about going in longer, here's the issue. Would it have been better to get in here or better to get in here? So that's the problem. Notice here, great education on the daily chart on this one. And what I always say, first move off the bottom, you got to keep that stop low. Don't move it again, all right, until you get here. So the stop had to go here then. Now you can use the pyramids if you want, all right, or you can use the pyramids on the weekly chart if it's a long-term trade. Okay, so I probably at this time be a little bit cautious about going in new now. We got bearish divergence here. You kind of maybe are still in a correction here. So things aren't as clear as they were in the beginning of this move up. And you're getting close to the target. Target's 160 to 208. I mean, you still got some room. But I think if you were looking to get long, maybe an option here would be best. Simple call option. So you don't have to worry about the stop or wait for it to pull back. Okay. So if you're going to try to make it up here, you're going to have to wait almost a year probably for it, maybe 2 if it corrects. Okay. If you're in it, stay in it, unless you need the money now. Okay. Qualcomm, San Diego company here. All right. Let's see what we got cooking on this bad boy. All right. This one I'm actually thinking not bad, except for the 60-minute chart. Okay. So I'm kind of liking this. All right. In some ways, but I'm going to hold off on it. So we got a kind of a double bottom here, right? Looks like we had enough of a retracement. So probably after this shakes out, we're going higher. This is fine. So if you went in earlier when this was okay, all right, your stop would be still low, right? Okay, be right under here because you went up, pulled back, went higher, so you can move your stop off the bottom. So I'm thinking that's pretty good, but this is red. So maybe it's not done coming down. So I don't think I'd put anybody in it today. But if you're in it, I would stay with it for right now, okay? And that is Qualcomm. All right, let's go Alexander. Okay, MNSO. Okay, he's got this on a watch list, and a watch list means just that. He's watching it. Okay, so too late to go long. Not much history. Okay, only goes back to 2020. So the green PTF, which was right, okay, is now yellow, so it's neutral. This is red, however, so I'm kind of a little nervous on that. We've had basically we have bearish divergence here. You may get one more high, but that's probably it. So it's not my favorite. I don't think you're getting in early enough. Okay, don't think you're quite getting in early enough on that. I want to take a look really quick at some of the real estate ETFs for a minute and see how that's doing. They have rebounded over the last month pretty significantly. I don't know if you've noticed, but in our area, prices are going back up on homes. So it's kind of interesting. And we've got kind of a conflict here in that we've got red here still, green here. All right. And so far, you know, if you drew a trend line, it would be a bullish trend line. There's a trend line master telling you the same. So, you know, what do you do with this? Well, if you go by the 60-minute chart, it looks like it's going to come down again before going back up. And so I find that interesting. However, this is close to going green here. So if you look at this chart here, all right, there's two things that are going to happen. I mean, here's the COVID low, so we're not there yet. Okay, we came down quite a bit. We may see a recovery up to about 150 on this. And then we're going to have to see if it sells off when it gets to that inflection point or goes higher. So I'm thinking short-term real estate could rebound 10%, maybe 15% over the next 6 months. And that's regardless of what they're doing with interest rates. I mean, if you look at that chart, that's what it's showing. Now, with that said, we may get another dip down before we get that move up, but we'll see. So maybe the next, I don't know, tough to call. All right. I guess what I would do is watch this channel here and here and see which way it breaks out. And a PTF has a 75% probability, so it's not right 100%. Maybe this thing will turn green. Okay. Now, the other interesting thing here too is on the 60-minute chart here, you've got inside price bars. Look at that. So whichever way, this is the current inside price bar. This one's forming today. So if today does not go above the previous inside price bar, then this becomes the new price bar, inside price bar. Now, why am I bringing this up? Because in technical analysis, whichever way the inside price bar is eventually taken out, then you're good to 2 to 5 price bars in that direction. So if, for example, this thing popped up and went above here, then you can expect 2 to 5 price bars in this direction. But this is a 60-minute chart, so it's nothing to write home about, okay? It just means that is a breakout to the upside. And sometimes that can be important when that upside is near a critical point like here, but it's not. It's only here, okay? So, you know, you can use that on any time frame in any market, okay? So kind of interesting in real estate. And I think this is why we're kind of seeing people are scratching their head, higher interest rates, why are prices so high? And this chart is currently, you know, a visual on what you're seeing in the market as a whole. Okay, a little bit of confusion. Okay, because short term not so good, long term looks good, intermediate's kind of messy. So it kind of represents almost what we're seeing in terms of some of the frustration and confusion people may have in selling and buying a house right now. What to do? All right, so a little insight on that. All right, let's go, Alexander, to your next one, PANW. PANW. Give that a second to load. Okay, So we looked at this one before, all right, and we were kind of expecting the possibility of some type of move down at some point. It went up a little higher, obviously, so that's where it's coming down to. So let me draw these here, okay, at this point. So that's kind of where we're looking here for a retracement. We've got red on the 60-minute chart, so you don't want to go long yet. But I'd say when this gets in here, all right, you may want to consider a long. This has got to turn bullish or at least neutral. And we've got to have a green owl over here and a pyramid form to the upside here. So that's not going to happen anytime real soon. So let this thing unwind. If you traded the pyramids here, you did real well on both these runs. Okay, so you made money going in here and getting out here, and then you went back in here and got out here. All right, so you made good money on both those legs up using our pyramid trading points. But right now it's profit taking and correcting at this time. Okay, so I definitely wouldn't do anything with that. All right, I think I might have gone through them all. Can you believe it? All right, let me just check. Did I miss anything? Let me know if I missed anything. Thaddeus, you are welcome. Great to have you here. Okay. Since I'm not seeing anything new coming in, which is fine. All right. I'm going to just quickly go over to the day trading time frames and let's take a look and see what's cooking on those. Now, in the day trading time frames, we use the same analysis. The only difference is we change the time frames. So for example, our long-term time frame is a whopping 5 minutes. Okay, 5 minutes. So each price bar represents 5 minutes. Our intermediate time frame is 1 minute. So each price bar represents 1 minute. And our 15-second time frame on the far left is the short term. Now, if you look at the charts and you weren't paying attention closely, you probably wouldn't even notice I switched. And that's because of the fractal symmetry in technical analysis that you see when you, no matter what time frame or market you're looking at, right? So in a case like this, our software works on all time frames and all markets for that very, very reason. And you can see the pyramids in the structure. Let's quickly just run down and take a look at the MES time frame. All right, so that hit our target here and look, bounced way off. And look how great the pyramids did here. Entry, trailing stops, and there we are. Okay. And we're seeing bearish divergence. So we're pretty well protected there if it comes back down. But yet it let our profits run pretty much as it could in a very short period of time. So kind of cool. All right, let me see. I got a couple more coming in here on the longer time frames, our regular time frames. So let me go back to there. All right, we've got NKLA. Alexander, this one's for you. Okay, let's see what we got cooking. Okay, good. Good to be long. You're already long on these. I think we talked about these obviously before, and these were also in our more market opportunity report, which is our stock picking service. So, or subscription. So on this here, you want to just stay with it. Okay, a couple things here. Now you have to decide when you take a trade what your intentions are. Are your intentions to trade more short term or long term? Because this is pretty well right for you to stay in this a long time. Okay, we just go to the weekly chart and take a look at some normal profit taking areas. You're talking about possibly getting into the 30s on this, right? Right, and you're sitting at $3. Okay, that's huge. If you're trading more short term on the intermediate time frame, okay, you could certainly use that as a possible target. You might use something a little closer, like this area here to here, and our target's 7, which is a double your money. Okay, and then we should get a pullback, and if you want to go back in after that, you can. Pyramids have done an outstanding job, all right, getting you in early on this. Now, again, if you're going to try to make it up to these targets, keep your stop as low as you can. Let me draw this a little more accurate here. So you want to always make sure on that first leg up, you have to make a decision. Are you trading just the first leg, or are you trying to get way up to the target? If you're going to get way up to the target, guess what you got to do? You got to go grab your fibs, okay, and draw those in, and make sure you use the pyramid below the fibs. You want your pyramid, your stop here, okay? All right, my computer's getting a little funky here for some reason, so I may crash again. If it crashes, we'll end the session today, okay? Because we're pretty much almost there anyway, but kind of, you know, when it gets a little funky. All right, MARA, let's try to get to that one. Must have something going on in the background that is taking a lot of the resources that I don't normally see to check that out. Okay, let that load. That's MARA. So I think we'll wrap it up after these, Alexander. Okay, so MARA, all right, another good one. Okay, now it's kicked back in. Okay, so this looks pretty good. You're long on this. I would stay long on this. You will get a pullback, all right, on this. But I think after the pullback, you're going to have much higher highs. So keep your stop. And at this point here, let's just draw in a quick retracement here to here. Keep your stop under 1282. Okay, keep your stop under 1282. All right, UNG, let's take a look at that. This is natural gas ETF, and you know we love that. Okay, so natural gas, stay long, have your stop low here. Okay, here's your bottom. All right, remember, you could get a double bottom, so you don't want to move that stop up now. Do not move the stop again. If your stop is here, do not move it until it gets above here, and then move it up to here. Okay, that's what you want to do with that, but not yet. So stay in that. If anybody wants to go long in this, not a bad price to do it. I know you got a red owl here. You could wait for that to go green, but you got it green here, and you're pretty nice here. So you could go long here and put your stop here. I'll put UNG down as a buy. All right, I don't mind doing that. Put your stop under the bottom, okay, around 5 something, 588 or something, 87. Okay, so that's not too bad. Okay, so that one we'll put on a buy list. All right, so I'm going to wrap it up. All right, so for today, all right, here are the following ones we're recommending. Okay, USO, that's the ETF for oil. Put your stop at 67.35. NIO, put your stop at $10.45. ADM, put your stop at $76.58. And let's just get the exact stop on this bad boy. And on UNG, put your stop at 586. One tick under the bottom. Okay, and leave it there for a while. So those are the 4 I'm recommending for today. Okay, on the watch list is one that Al suggested, ZS. First time we looked at that this week. So that one goes on the watch list. All right, so that is it for today. Okay, all good, everybody, all good, good. Thanks for hanging in there. Sorry about the technical snafu, but sometimes those things happen, and nothing we can do except come back, right? So everybody enjoy this today. Good day. I think we got some good stock picks. Market's still strong this morning, and I expect the market to continue higher. All right, it's getting at some critical levels, but I don't think it's ready to fall yet. So I think everything looks pretty good. All right, let me see some comments coming in here. All right, Alexander, thank you. Bennett and Jean, everyone have a great weekend. Right back to you, Alexander, thank you. All right, so good to have everybody here. All right, so we'll be back next Friday. Stock Analysis Friday is every Friday at 8 a.m. Pacific time. And we'll put, make sure you have the bell on so we notify you when we get ready to post the next session so you don't miss it. Have a good weekend, everybody. Thanks for being here. And remember, always use risk control. Take care. Thanks.